Welcome to Bears in Exile. Today is Wednesday, March 28th, and this is the market overview. Looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, XOI, XLF, Apple, GE, CompQ, and VXX. Okie dokie. I missed all the fun and excitement of today, but very nice. It was a down day, which is what we were expecting, and it's nice when things decide to play nice. Anyways, here with the Dow, nice big long day. Several things of note. Most of them good for the bears. A couple of them not so great, but for one, we have the big green candle from Monday, and the first support level is right in the middle. That was broken, closed underneath it, very pretty. Gave us a downtick today, and that downtick was resolved intraday, also good. In addition to that, the bigger level of support being the bottom of the candle was broken today. Didn't close underneath it, but at least it peaked underneath it. That is encouraging. So, some very good signs, but cautious sign. Bubble corrective target met, and normally you want to see what it does from that point. I do expect there to be more down movement through Friday, and then after that probably a return to the upside, but that remains to be seen. You have to see what happens with this downtick target being met, but hopefully should be more to the downside for the rest of the week. Now, everything is not perfect. We have the 14-day still ticking up. That is not good. It would be great if we can have it level off and turn down, but between now and Friday is only 2 days, and that is what it is. Stochastics both barely pointing up. Also not the greatest. It would be better if these were pointing down, at least one of them. That may happen tomorrow. Hopefully it'll happen tomorrow. CCI pointing down, RSI pointing down, MACD histogram ticking down, and the MACD also pointing down, and we already have the bearish cross on it. So those are encouraging signs. So overall, yes, it is a bit mixed, but still sticking to the plan and the idea that through Friday is the bears' opportunity, and today was nice, very nice. SPX, yep, not as strong as the Dow. We were able to close just a hair below the midpoint of the big green candle. That is encouraging. If it had closed right at it, that wouldn't have been as nice, but it did just barely close below it. That's great. We had a downtick target made today. That was also resolved intraday. And look at the shadow here. It goes right to the bottom. Well, maybe it's just a hair above, but effectively right to the bottom where this support should be, and bounce back from it. That is natural. We do need to have a break and a close below it. Hopefully that'll be tomorrow, but 14-day ticking up, stochastics ticking up, RSI down, RSI down, CCI down, MACD histogram down, and the MACD looking for a bearish cross. So yes, there is a reason to believe that that will happen now through Friday, and we're waiting for that to occur. In any case, for the down movement, getting down here to this previous floor, it would be good. That would be the natural move, and if we are going to have a bounce post Friday, that would be a good level for it to do so from. So that's what I'm personally looking for, and if it exceeds it, hey, that's fantastic. Now, what else do we have? Oh, of course, volatility is increasing, so we should look at the 60-minute just to see what we can expect tomorrow. in the morning. And this is not as bearish as it was yesterday, of course, with this down move. Yesterday, everything seemed to be poised well for a down move, and that has alleviated itself. I thought it would take more time to reset some of these, but it's doing what it's doing. Taking a look at that, 14-day is curling over, good for the bears. We could have a supports further down movement in the daily time frame. Now the stochastics have already gotten low and are rolling over, along with the CCI and the RSI and the MACD histogram, and the MACD is ending the day going sideways. It still has the bearish cross. Yes, the up move on these indicators can fail and continue on their way down. If not, then we should have a bump in the morning. Going up for a possible reset or a partial reset, we want it to meet up with the 14-day RSI moving average and then continue with it as it hopefully will complete its move to the downside, and that should exceed today's low. That's going to be very similar on both SPX and the Dow, so I won't do it twice. CompQ, the NASDAQ. Yep, we finally got a downtick today. It has a fair ways to go before it is met. There is 3 more days for this to complete. And the 60-minute time frame, I'm sorry, in the daily time frame, 14-day RSI moving average ticking up, stochastic still locked high, CCI ticking down slightly, RSI doing the same. MACD, very slight tick down, MACD histogram tick down. Much stronger than the Dow or the SPX. Going to the 60-minute, just to take a little gander at it, see what we can expect. Very similar to the Dow and SPX, 14-day curling over high. Everything else essentially attempting to move on up, with the exception of the MACD, which is still moving down. So yes, encouraging signs that there will be something of a bump, and then should continue on its way down to whatever level that's going to be. Just looking through Friday at this moment. The VIX, almost a perfectly formed gravestone doji. Has a little bit of a bottom here, unfortunately, but regardless, this can be interpreted a couple of different ways. Yeah, it went up here to the bar, was rejected from the bar. Look at the Bollinger Bands, massively constricted, obviously getting ready for a major move. Is this a consolidation area from which it can spring? Possibly. We have the stochastics ticking up, along with the CCI, the RSI, getting the bullish cross on the MACD histogram ticking up. The only fly in the ointment is the 14-day RSI moving average, which is still ticking down. That needs to level out. It needs to point up. Is it going to do that in 2 days? I don't know. I would kind of say probably not. But having all of these reset in the daily time frame to the top, or at least partially to the top, definitely could occur through Friday, and that would be nice. And then a rollover and move with the 14-day next week would support a bounce, which I personally think is probable. $60-minute time frame. We can see the 14-day is getting pretty high, and the stochastics are putting down, along with the CCI, the RSI, the histogram, and the MACD. Not the greatest for bearish movement in the morning, which is supported by the charts of Dow, SPX, CompQ. So that's okay. Alternatively, we are at the long-term moving averages after busting through them. A bounce at this point off of it would be massively bullish for the VIX and bad for the market. Now, keep in mind that Uncle Ben does talk tomorrow. It's his last speech of the week, and that is what it is. Be very interesting. I mean, normally he will flub up once. I kind of think that occurred to some extent on Tuesday. So tomorrow, does he attempt to pump up the markets, fix what he said, etc.? It'd be great if he trips over his own 2 feet and finishes the move out for the week, but we simply don't know what he's going to say tomorrow. XOI oil. Yep. Bearish. Just like the markets. Red. 14-day still ticking down. Good for the bears. MACD histogram ticking down. Good for the bears. Down for the MACD itself, the RSI, the CCI, and the stochastics are very muted. A little bit of a positive slant, but essentially sideways. Not a bad looking chart. You can notice the long-term moving averages are beginning to collapse. That is wonderful. And of course, below the lower price consensus level for this month as well. This is very encouraging. This is good for the bears. We did close very close to the lower Bollinger Band. A move away from it in the morning at least would be entirely natural, and would also support an up movement in the indexes, at least to begin with. Be much more preferable if everyone just said, "Oh, I'm heading for the doors, enough of this." But just to be realistic, I don't think that we're at that point yet. Certainly the VIX does not indicate that we're at that point yet. TNA, yes. Very nice. It is a fat body hammer, getting a downtick today. Downtick resolved intraday, getting as low as 62, which I think was the target that we mentioned in the daily running thread on Tuesday. That 62 was entirely probable, because that would close up the gap here. That was done today. I wish I had been around to take advantage of that. But anyway, it is what it is. 14-day ticking up, stochastics ticking up, CCI ticking down, RSI ticking down, histogram ticking down, MACD ticking down, and not getting a bearish cross yet. If we do, fabulous. In which case, we would be looking at 59. And if we had a really... I don't see this happening, but if we had an absolutely wonderful, incredible next couple of days, or maybe even Monday or Tuesday, going down for a test of the 200-day, which would effectively be a retest of the floor to some extent, that would be awesome. But possible, but I don't think exactly likely. So, 59. XLF, the financials, very encouraging yesterday, getting an ultra slight downtick. It did go down today. It did not resolve the downtick target, just shy of 15.6, ending with a hammer. 14-day still ticking up, stochastics ticking up, down on the CCI, sideways on the RSI, very high. Slight down on the MACD histogram, sloping down. I like this. This is good. This is going to catch up with it at some point. Obviously not today. Apple. Oh yeah, Apple. We have a hammer here at the top, possible reversal, but this is Apple. You can't count on anything with stinking Apple. 14-day and the stochastics locked in the upright position, up on the CCI, sideways on the RSI, massively high, sideways on the MACD, very, very slight down on the MACD histogram. I also like this slope of the MACD histogram. It's going to catch it someday. We still have the negative divergence. There has been no movement to attempt to correct for this, and it's anyone's guess when it will. GE, I have a must be a false tick or a data error, because this sucker goes all the way up to 21 and it did not go there today. Very, very strange. I don't know if this is a phantom bar or not. 14-day ticking up, stochastics mixed, up on the CCI, down on the RSI, down on the MACD histogram, down on the MACD, no bearish cross as of yet. Not wonderful, and not too much to take away from this, especially with the candle being messed up. UUP ending with a gravestone doji. Very nice. We have no uptick yet. It did attempt to kiss the major price consensus level, backed away from it. 14-day RSI moving average ticking down, not good for the bears. Stochastics mixed very low, nothing to see there. CCI ticking up, RSI ticking up. MACD histogram ticking slightly down, and the MACD ticking down itself. Not too much to take away from all of this. Very difficult to tell what this should be doing at the moment. So, in that vein, FXE, try to get a different read from a different direction. Closing above the upper price consensus level, even though today was red, it did get below it. We can see that there is excessive separation in the short-term moving averages. So there is a little bit of a bubble here. Does that mean tomorrow is going to be the day that it moves? Well, we don't know. But we do know that being in 1.33 area is a little bit of excessive price, if you ask me, simply because the euro should not be valued so high, in my opinion. But this is news driven, so it is what it is. 14-day RSI moving average ticking sideways, stochastics locked high but mixed, down on the CCI, down on the RSI, up on the MACD histogram, and slightly up on the MACD. This would be awesome to see this go up and attempt another kiss of the upper Bollinger Band. That would be great for the bears. It would be great between now and Friday. We just don't know if it's going to happen because this is pretty mixed. There are signals for a down move in this, which would not be good for bears. GLD, after its kiss of the 200-day moving average, backing away from it. Fortunately, the middle Bollinger Band is still below the short-term moving averages. 14-day ticking sideways, stochastics mixed, down on the CCI, down on the RSI, slightly down on the MACD histogram, and a small uptick on the MACD itself. Very mixed, very mixed. Going back up for a test of the 200 again would be fabulous if the dollar is able to decrease tomorrow. Then that will be very, very easy. But and then if the VIX increases tomorrow, which is entirely possible, also very easy. So, I wish there was a more definitive view on that. SLV, more of the same. Middle Bollinger Band is not below the short-term moving averages. Down on the 14-day RSI moving average, stochastics mixed, down on the CCI, down on the RSI, slightly up on the MACD histogram, down on the MACD. Very, very mixed, very, very unattractive. How about that? The movement of the short-term moving averages would suggest further down movement, though, so there is that. And I think that is about it. I'm really looking forward, or looking for, further movement down into Friday, but we definitely could expect a bounce of some sort in the morning, which also corresponds well with the market being bullish leading into a speech by Bernanke, and his words are going to carry the day. And that's just all there is to it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.